Let's review our trades for today. Today is Thursday, September 28th of 2023, and we did 2 trades in our main option trading account. So first, you see we did a bullish put credit spread in KR. So we sold the KR October 20th $44 put option and bought for protection the $40 put option. We put into our pocket 39 cents per share. So here's our charts here of KR. Now, first of all, our top right chart, the weekly chart. Notice it is trading below this red 200 moving average. So you do want to keep an eye on that. So that's a little bit of a weak sign. We prefer it to be above that moving average. But like a lot of stocks, it's below its 60-minute moving average right now. Now over here on this daily chart, you'll see here kind of why we decided to take a position in it. So we see that it's stuck kind of in a wedge here. But it's been finding nice support, this upward sloping trend line here. Notice that yesterday, almost to the T, it found support right around that area, just above our $44 strike price. The volume wasn't exceptionally high, and we do see a nice leg there. Nice leg on the bottom, nice leg on top, where sellers sold it down, buyers bought it up. Today's candle totally engulfed yesterday's candle, which is a bullish sign. However, our volume wasn't quite as high as yesterday, so we'd like to see that volume higher, but it is high enough volume. With it engulfing that candlestick from yesterday, looks like a nice bullish sign. So with it finding support, nice bullish candle, right at an area that we expected to service to find support, and it did find support, I decided to go ahead and do a starter position in it. Now looking here at our weekly chart, you see a little better this wedge that it's stuck in. Notice that it tends to find support above this red 200 moving average. So it looks like around, it's around, what is that, 6-7% above it, and we find us at that spot again. So 4 or 5 times over the past several years, it's found support about 7% or so above the moving average. Looks like it's trying to do it again. Notice here at the volume that there was very high volume 3 weeks ago, where sellers sold it down, buyers bought it up. Then last week, the candlestick was within that area. Then this week, we have a nice long leg again. Of course, now we still have one more day, but this nice long leg tends to signal a bottom here. Notice that a month ago, that nice long leg signaled a temporary bottom. Several months ago, nice long leg showed that it was at a bottom. Sorry, my tongue's getting twisted here. Back in March, same thing. Back in October, same thing. So this nice long leg tends to signal that we're at a bottom, but again, we'll see how the week ends out tomorrow. And we plan to add to this if the return stays sufficient and it continues to find support above that $44 area. Now NEP, this is one that's gone against us. Yesterday we rolled our bearish call credit spreads and our covered calls down to 45. Well, it had another big drop today, so I decided, you know what, we'll just leave those $45 short call options open and we'll sell some new call options. So we sold 4 NEP $35 call options and got $1.35 per share. Remember, we own 400 shares of NEP. So pull our chart up. So again, it's another big candle, higher volume even than yesterday. So you see this really strong high volume. I mean, volume is ridiculously high. We haven't seen this volume as far back as the chart goes. If we zoom out here to our weekly chart, no week has had this much volume. It's a very high volume. I've read the news. It doesn't scare me too bad, but apparently it really scares the market. Maybe there's something I'm missing, maybe not. But we'll just keep working it, trying to repair it. We can add to this position. So unless it's kind of settling down, especially if it reverses on our short $35 call option, then we will consider selling some put options to help roll that cover call up if we need to. So we're short 6 of the $45 call options that expire in October, and now we have a covered call at $35. So we collected some premium, big drops. We'll see what happens over the next couple of days, if it stabilizes or not. But for now, it's a position that's really going against us, winning against us fast. So of course, if we had known it was going to do this, if we had known it was going to drop, what ended up being about 36% in 48 hours, we would have got out. But we didn't know. These things happen. That's why you limit your position sizing and you have a plan on how to repair positions if they go against you, or some people like to get out. I tend to like to stick with mine as long as something fundamentally hasn't changed the company. I know positions will go against me. It's kind of like offering insurance, fire insurance on a house. You know, every once in a while there's going to be a fire. You got to pay out of pocket, but in between you receive premiums, and even while the fire is happening, you're still receiving premiums. So we're getting premiums, we're collecting money, and lowering our out-of-pocket costs in this position. So that's our trades for today. I hope you have a great evening.